Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro, Dollar, Euro, USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4 hour chart of DXY, and right now DXY is standing at 102.15. We have been talking about the important or critical support level of 102.50 to 102 level on DXY, and DXY broke it for a few hours, and DXY has again regained its position above the support level here. So right now DXY is struggling to maintain the overall bullish setup of its overall bullish setup. So things are quite critical for DXY, and as you can see that right now DXY is also trading in a downward channel here. The line at the top is acting as a resistance and the line at the bottom is acting as a support. Okay, and if the channel continues, then we may see further downside on the chart of DXY. Further downside on the chart of DXY means further upside on the chart of Euro USD, GBP USD and other pairs. So the move of DXY will be very important, because DXY right now is trying its best to hold the level here. And one more thing that I have observed now is that the 200 moving average previously it was acting as a support in the market, and the same support has become the new resistance in the market. So support has become the new resistance, and right now it is not allowing the market to go up. So 200 moving average is acting as a new dynamic resistance for DXY, and if we follow the channel here, then yes, there is a possibility that we may see further downside on DXY. So whatever it is, this is market. Things may be very volatile for the next few days, so please be careful and keep your one eye on DXY always. Now let's look at the chart of Euro Dollar, Euro USD, and this is just the opposite. DXY is a downward channel and Euro USD is an upward channel, as we can see right now. So if you have any ongoing buy position on the chart of Euro Dollar, Euro USD, then be on the trade, because overall the setup looks very much positive. Okay, and if you're looking for fresh entry or fresh position in the market, then in that case I think that there is a good chance or good possibility of Euro USD taking support at the line below here, because this line is acting as the dynamic support for the market, because this is a upward channel here. And in case market shows some kind of sale also, there is a good chance that 1.0650 level, 1.0650, 1.0645, this level will be acting as the support zone for the market. So under normal circumstances, okay, if there is no news in the market, volatility is normal, so you can expect the market to take support and bounce from here. Why? Because first of all, this is the Fibonacci 23.6% retracement level, so one support, and the same level was also the previously resistance in the market. So Fibonacci 23.6 plus previously resistance, which is right now acting as a new support, and then we also have the 200 moving average. See here in the chart of DXY, the same 200 moving average is acting as the resistance, and the same 200 moving average is acting here as support here. So 200 moving average. So if we combine all the factors here, then there is a possibility that in case there is if we see some selling also, market will try to hold this level here, and there's a good chance, good possibility of market bouncing from this level. If market bounces, you can definitely go for a buy position, but yes, you must take additional confirmation from the chart of DXY, because DXY movement will be very critical for any USD pair. Okay, and as we all know that no level is permanent in the market. Okay, so in case if we see heavy selling in the market, if you see that market starts going down, forming big fat red candles, in that case your next support level will be 1.0590 to 1.05 1.0600. This will be the new next support for Euro USD. Why? Because this is the Fibonacci 38.2% retracement level, which is stronger in comparison to 23.6%. In addition to that, this level previously was the resistance. Again, similar scenario. Try to understand. Here we in this level we have Fibonacci 38.2. Then we have previous resistance which will be acting as the new support, and then we have the 50 moving average. We have the 50 moving average. So again we have three factors that are pointing or indicating towards a good support around this level as well. So in case market breaks the upward channel also, definitely we can expect the market to bounce from this level. If market bounces, we can go for a buy. But my dear friends, this is our duty to protect our hard-earned money, protect your hard-earned capital. Do not trade without confirmation. Whenever you'll find market coming down to a level, market testing a particular level, observe the market first. If you see the market is trying to take support, look for any good price rejection from below. If you see market forming a hammer pattern, bullish pin bar, or any good price rejection or any proper confirmation, then only take a buy position. Until and unless, okay, do not take anything, because capital protection should be your first priority, or as an always. And one more thing I would like to add here, that in case market starts going up also, and if you see market breaking this level also, do not take any buy position, or at least I'll suggest you not to take any buy position above this level if you are a beginner or new trader. Because see, try to understand one thing very well. If you observe the pattern of the market here, then you can see the market is forming pattern like this. So if you take a buy position here, after 20-30 piece market will be coming down again. थोड़ा हाई बनाएगा, हायर हाई बनाने के मार्केट फिर से नीचे आ जाएगा, ठीक है. So in that case you will be panicking again. So it's better not to take any buy position. And if you are looking for a safe strategy in the market, safe entry in the market, then buy at dip. Okay, buy at dip should be your strategy as of now. Okay, until unless we see any strong trend reversal sign. Okay, as long as market is moving like this, as long as we see the same volatility in the market, you can follow the buy at dip strategy, and that will be the best thing. And please follow proper risk management. Please protect your capital. Do not gamble with your hard-earned money. Okay, my analysis can be wrong as well, but for one bad trade, you should not be wiping out your whole capital. Follow proper risk management. Okay, bye bye. Take care.